We're here with Tron Black, the lead developer of Ravencoin and a principal developer at Medici Ventures. Thanks for talking with us today, Tron.
Thanks for having me here. This is great.
I'm curious a little bit about your background.
So my background, I have a computer science degree. I have a master's in business, an MBA, and a passion for cryptocurrency.
When did you start learning about computer science or choose to be a computer scientist?
So I was very fortunate. This feels like my third wave of this thing. So I was doing programming on the Atari kind of before IBM got into PCs, and so I was building stuff for my dad when I was like 11 or 12 years old. Just stuff that kind of like demonstrated his equipment for like a trade show kind of thing in like water treatment area. Just programming, and then so I kind of got to be part of the wave of PCs and that whole advent, from oh yeah, there's going to be a PC on every desk, and them thinking that Bill Gates was crazy for even saying stuff like that, and then kind of moving into the internet and the opportunity to kind of see that wave and the transition from from not existing for the individual, right, to what we have today, where all of our shopping and movies and everything come through it. And now I feel like I'm in this third wave, which is going to be, I think, just as big, which is the movement of value. So Bitcoin and blockchain and that kind of thing, and the ability to move value is going to be a big wave that's going to affect banking and how we move money around. And Yep.
Were you staying up to date on any internet money projects before Bitcoin?
I was. So I was familiar with kind of the e-gold, digigold stuff that was being done kind of in the 90s, and some of the having it shut down because it required digital money is pretty easy to do if you don't have adversaries, right? You put in a database, you have a trusted entity, you can move stuff around fairly easily. But if you have somebody that says, yeah, you can't mint money, create money, that kind of thing, that's the job of a sovereign government, wherever that is in the world, right? Then they try to shut it down. Then there's usually a building and a place they can knock on the door and seize things. And when Bitcoin came around, it was kind of the ability to do that, check for the double spend, decentralized, and that was the real shift.
And was Bitcoin something you were excited about when it was released?
So I wasn't aware of it when it was released, meaning January 3rd, 2009. Completely oblivious to it, and not even really aware of it. I think I probably saw something about it, Slashdot or something like that. But it had mining, and I saw something, but it sounded weird, and so it wasn't really until 2013 where I kind of said, "Oh, I get it." But it was because of the Cyprus events that were happening in Cyprus, where they basically shut the bank doors and they said, hey, we're going to take people's money right out of the bank. And so all of a sudden there was these articles that came out that said, yeah, your money in your bank isn't really yours, and so Bitcoin's the solution. And so at the time I was kind of following that and said, oh, really? The solution? What's Bitcoin? And so that's really kind of what started this. That was kind of early 2013.
Did you start looking at Bitcoin as a computer scientist or more as somebody interested in kind of financial events?
I would say both. So simultaneously and completely. It sounds cliche because everybody says that, but this going down the rabbit hole kind of thing of seeing it, kind of like then understanding it, seeing that what mining really was, which is kind of a pacing of these blocks and the security of the block. It does several things, and then the incentivization of how that works. Kind of just understanding that, kind of how this system kind of fits together like a Dyson sphere, right, where it's all kind of like, okay, just has to all be connected together, and then it functions. And it seemed like there were, that was all very well designed, but the most important part was probably not its genesis, the January 3rd, 2009. It was like May 22nd or something in 2010 or 11. It was the pizza purchase, right? Because that gave it a value. Until then, it was just like, okay, we're creating this record or log, and I can move stuff back. But if they're not worth anything, the incentive mechanism was just people, generously running their computers, and after that it became a system where there's an incentive to mine it. There's a value. You can transfer value because other people will purchase it or use it on the other end. That was the important event. Another important event.
Did you ever dig into the the technical side of the white paper, the technology, kind of with your computer scientist hat on?
Yeah, no,
What
I
were
mean,
your
I
first
read the white
impressions?
paper. White paper is like 9 pages. I
Yeah.
mean, you can read that, and I mean, you don't need to be a computer scientist to understand that. Maybe a little bit of math on some of the probability stuff at the end, but you don't need to be. Everybody should read that.
I always found it amusing that the Bitcoin white paper was 9 pages, and then during the ICO days, they had like 40 and 50-page white papers.
Yeah.
So what were your thoughts as you read the white paper?
So it seemed elegant. I mean, it was elegant in the sense that it could be described relatively, simply. It made sense. Of course, I was coming to it with the advantage of seeing it actually running, actually working, actually having a value, and already trading, right? So all of those things where I might have seen that white paper, in 2008 before it started, and might have dismissed it as like, yeah, it's probably never going to work, But once it's working, you read through it, you say, yeah, that was a really good idea.
What were some of your first activities in the space?
So that was something that I said, all right, this is what I want to do. And so I was reading everything I could get my hands on. Nowadays it's like an avalanche, but it's hard to keep up with all the stuff that's going on. But at the time, it was like you're scrambling for data, like you're scrambling for information. You can get some technical stuff about how it works, but you're looking for more. Once I kind of figured out how it worked, I said, I want to do something in this space. I recognized, because I had done like payment stuff before, like credit card processing, things like that, previous company. And I said, all right, the thing that it really changes is it inverts the trust model. So the people that, when you pay somebody, you need to make sure that you get what you ordered. Otherwise, you don't have a Visa to call, for example, because it's hard money. And there's still a kind of a conflict between Visa. If you're trying to buy something with Visa, you could get that reversed. And so selling Bitcoin for credit card isn't a good idea. But I had to experiment with that too. So one of the things I did is people said that, well, you can't sell this online. I said, why not? Let me give it a shot. So I did, but I limited my risk. I just said, if they reverse every transaction, this isn't going to work. Well, it worked because the fraudsters are looking for I'm going to do $1,000, not a $5 or $10. So I did that for a while. And then I said, we need a way to prove that the person on the other end, meaning the merchant, the person that's selling the pack of socks or the hot sauce or whatever, is trustworthy, because I don't want to send Bitcoin to somebody that isn't have a 100% rating kind of thing. So the first project was actually called Verified Wallet, and it was a way to rank, or sort of like VeriSign meets Yelp or VeriSign meets eBay ratings, right? So something to keep it from being sock puppeted, like this is the actual person or entity, and then a rating system. So you could say, oh, they deliver every time, so trust. So I did that for a while, and then that got kind of bound up with somebody else was trying to do basically what they're doing now, which is Coinalytics or something like that, where they're like trying to attach names to every address. Well, that's really, really bad in the crypto space. Still shouldn't be a thing. But somebody suggested that. The Bitcoin community went nuts, crazy. It was like, we can't do this. And I realized that what I was trying to do would be conflated with that. So I changed what I was doing and started doing accounting for crypto, meaning tracking what addresses have how much and how much that's worth for like 100 altcoins, and then being able to connect to APIs for exchanges. And then if you were mining, those also have APIs, so you could just add that up and that kind of thing. So I did that for a while, and then I had the opportunity to work for T0. And well, I went to, I saw Patrick Byrne speak in Amsterdam, and he wanted to do a parallel crypto equity, and I said, I want to be part of that. And so I went to work for T0 for a while. So that was kind of the first few things that I did.
What was that experience like?
It was great. So it was really, really early on. So a lot of it was experimental, and a lot of it was getting the legal right. It still is, right? It's a very difficult thing to do. And so a lot of it was, some tech, a lot of legal, which I wasn't as much involved in, but there were a lot of lawyers kind of sorting all that stuff out, making sure it was legal to do. But yeah, it was. We also did the first bond offering, so it was between Overstock and I think the Bank of New York. And so I think it was a $5 million bond offering. We put that on Counterparty. Still there. You can go see it in the blockchain. If you have a Counterparty client, you can see that transaction.
But this counterparty really fell out of favor for, I guess, Bitcoin complex contracts or smart contracts.
I have a reason. It wasn't smart contract, but it was an asset issuance platform like Ravencoin. In fact, it was kind of the precursor to that. That and Mastercoin and open assets were really the ideas behind it, which was putting transactions for other assets on top of the Bitcoin blockchain. And I don't know if it fell out of favor as much as it got priced out of the market. There was a time, even in 2015, where we were doing these transactions, and it would be to make sure they go through. We had to pay $15 fees just for one transaction, because it included the Bitcoin transaction, included some extra data in the op return for the for the metadata for the counterparty transaction, which made the transaction larger. And at the time, the price of Bitcoin had gone up, and a lot more people using it. Blocks were filling up, and so the price went up, and so it kind of priced itself out of the market.
What was it like, kind of developing early on, at least for the bond issuance?
Yeah, pretty manual. I mean, we were constructing transactions sort of manually and reading through and learning how multi-sig transactions work, and kind of really at the guts level of kind of how Bitcoin worked and things like that, so that we could construct these transactions. So it was pretty technical work, but it was fun. It was like we were kind of leading edge, I guess, on those things. So
what did you work on after that?
So worked on a thing called I think it was originally called PATS. It was basically the digital lending platform. So it was basically proving that someone had access to shares that they could locate, so locating shares for shorting. And one of Patrick's things early on he had a fight with people who were doing naked short selling of overstock, and that caused issues, and for not just overstock but for other companies. And Patrick fought back, and I mean, there's writings about this on deepcapture.com and some of the other new stuff, but he kind of tells the story of kind of what happened. And so he's kind of had this fight against naked short selling. Naked short selling is different than short selling. There's nothing wrong with short selling as long as you kind of can borrow those shares. But when you kind of borrow shares that maybe don't exist, then you're kind of hypothecating or fake shares. And so you increase the supply of the shares, which in kind of just standard economics, you sell those into the market, you lower the price. And so he's kind of fought that for a while. So it was a platform to kind of solve some of that.
What's your purview today at Medici?
Yeah, so I actually left T0. I went to work for a company out of Hong Kong, ANX International, for a bit as a contractor. And then when I came back, so I ran into Patrick again and came back to Medici. Medici didn't exist when I was at T0. When I came back, Medici owned most of T0 and then a few other portfolio companies, and so I went to work for that entity, but then helped T0 finish up some of the stuff that we had begun before I left. So we finished that, and we launched Parallel Crypto Equity, which was the goal, on December 16th of 2016, I think. Yeah. So that was the goal. So we did it. So that still exists today, but the token's been moved over to the actual T0 platform, where we had a separate platform before. And then I get to help out other portfolio companies, which are, we have now a portfolio of, I think, 22 companies that we have investments in various sizes. And so I help out with those companies. And then in early 2017, I got wind of a project that Bruce and Patrick had talked about together, and that was Ravencoin. And so that's what I'm working on now. And that's really where my passion is.
Yeah, great.
Today.
Well, I want to talk a little bit about Ravencoin,
Yeah.
but I was curious about your time in Hong Kong. What was that like? And
that was great. So I was a contractor, so I did the work here, or not here. I live in Utah, so I worked from home. I did get to go out to Hong Kong a couple times. That was great. For a launch party and to help out do some of the development stuff out there. And it was great. It was working on essentially an explorer for open assets. There is one, but it was closed source, and so I was working on one based on BitPay's Insight, and I'm building that for ANX International. So that's mostly what I was working on.
So you're using BitPay developer tools.
Yeah, so BitPay's Insight is an explorer that works for Bitcoin, but it's fully open source, and it has layers. It can do merchant tools. It can do, what addresses contain what, and rich lists, and all those kind of things. So I was adapting that to work with assets, and assets being put onto the Bitcoin blockchain, similar to the way they get put on Counterparty, except it was using a slightly different protocol called Open Assets.
So were you developing a technology based off of BitPay's, or were you communicating with BitPay?
I was just modifying. BitPay's Insight is the Explorer code base, and so I was just modifying that to handle and also show assets.
Great. What excites you most about Ravencoin?
Yeah, so Ravencoin is my passion. It is a project that was the brainchild of Bruce Fenton. He's the stockbroker and also the former executive director of Bitcoin. And he had started this idea and had talked about it back in October 2017. And the idea was basically copying Bitcoin's code base and then adding assets to it. He had kind of a slightly different way to do it, that he wanted to do it, and we kind of worked out, based on my experience with Counterparty and open assets and Mastercoin and that kind of thing, we kind of worked out a different way to do it, which is what exists today. So it was kind of a combination of what he was thinking, what I was thinking, and then with Patrick's saying, hey, some of the developers at Medici can work on this. So it's a fully open source project. We copied the Bitcoin source code to start with. We modified it to become Ravencoin, which is relatively straightforward, right? It's the branding. We changed the mining algorithm, which was kind of probably the biggest change. We changed the issuance. We sped it up a bit. We increased the block size. We just kind of improved some things, took out some features that probably were added into Bitcoin and probably shouldn't be there.
Like what features? And
specifically RBF. So replaced by fee, I think was for something else that other participants in Bitcoin wanted to do, and so they put in this feature that you could just you could flip a bit and basically say you can reverse this transaction, not replace this transaction by doing another transaction with a higher fee. What that did was it made it much easier to a little bit like if you walked into, let's say you walked into a Starbucks and paid with Visa, right, and then you don't sign the whole thing because Starbucks says it's not worth your time just for $5, but you could walk out and call Visa and say, hey, I didn't really pay for this, and they'd reverse the charge and you'd get your $5 back for your coffee. They essentially added that kind of feature back into Bitcoin, and Bitcoin with a zero conf, right? Once it's confirmed once, it's pretty safe. Once, twice, really safe. 3, 4, 5. The more it's by the time it's 6, you could probably do billion-dollar transactions, no problem. But the zero conf transactions, the one that basically it replicates the transaction around the network, you see a green light or whatever, it's there. I don't think those should be easily reversed, and they kind of added a feature to do that. So we took that out.
And it's interesting because one of the main, arguments for accepting Bitcoin from a merchant's perspective is that no chargeback.
It is, and once they have one comp, it's very safe. But at zero comp, and the argument I think for replaced by fee is you could do that. You could always do that even without. It's not super safe, but it was a lot safer than Visa, right? I mean, it was a lot safer than taking a $5 Visa thing and not having the person sign the receipt. A lot safer because you would have had to kind of get your transaction in and get it to the miner that was going to mine it and things like that, kind of in advance and things. It was tricky technically. You could do it, but it was tricky, and so people weren't doing it unless they were really trying to be malicious or something, or they were trying to do it with gift cards that are $1,000 on each end or something, or rip off an ATM, by putting anyway. It's relatively safe for most transactions without that feature. So anyway, we took that one out. That got launched on Bitcoin's 9th birthday. And when I'm saying all this stuff, I love Bitcoin. I don't want to diss on Bitcoin at all. There were just some things about Bitcoin that I thought would be better, kind of the way we did. That's all. Anyway, we released on Bitcoin's ninth birthday as kind of a nod to Bitcoin and its parentage. And anyway, it started running. We had replaced the mining algorithm. That worked great. I mean, it was x16R, so it's a rotating thing, so it changes the order of the hashing each block. And that started operating and started gaining. You could mine it with a CPU initially. There were no GPU miners, and so we got a big network. There was no pre-mine. There was no ICO. We didn't sell any. No developers got any. It was broadcast. Bruce broadcast to thousands of people and stuff. So it started out very fair, and people could mine it with CPUs. So that happened after about 3 weeks. They got GPUs mostly working, and then they got better and better and better. Pretty much it became a GPU mined network. Fairly good distribution, fairly good hash rate, pretty strong. But while that was happening, we started working on what the real goal was, which is the ability to add your own asset. So if you're familiar with Counterparty or open assets or Mastercoin, it's the ability to create your own token. So you get to say what the token is and how many and that kind of thing. But the other ones are all built on top of Bitcoin, meaning it's actually using Bitcoin's blockchain. Well, the developers of Bitcoin aren't enthused with this, so they're not doing a lot of stuff to help out those other second tier systems. So there's a little bit of clunkiness in the sense that if you send an asset, at least dust amount of 546 or 543, something like that, Satoshis need to move with every asset, right? So as you kind of split, and then I send 2 to you and 5 to my friend, whatever, a little bit of Bitcoin needs to go with each one of those. Otherwise, the Bitcoin network won't accept that transaction. When we built Ravencoin, we were able to say, all right, that's fine. We'll keep this, a certain amount of Raven that needs to do it for a Raven transaction, a lower limit, but we don't need to send Raven with every asset transaction. You still need to pay a fee, but we don't need to include just a tiny bit of Raven with everything. So that made it easier to use. We added another pretty significant feature, and it wasn't easy to build, and that is the ability to say, for the system to make the name of the asset unique. So you have to pick a unique name. So that way, once you have a name, right, you've secured it. You've spent your 500 Raven, which gets burned. That's part of its tokenomics. You've burned the Raven. Then you have this asset with a unique name, and so you can build a brand around that, and you have the keys for it. You're the issuer, and that's,
you're protected too, to a degree.
Yes. So there is some fraud going on, let's say in the ERC20 world. So people are familiar with ERC20. That's what all the ICOs were built on. People could name those the same thing. Now they would not be the same thing because there's a contract ID, which is unique. But that's a little confusing, right? So if you get a contract and you do it and it has the name and you think, oh, this is it, but it may not be if somebody spoofed that contract ID to you, right? Whether they created a fake site that said, hey, buy it through our site, put their contract ID, it has the same name. You don't get that assurance that it's like a unique name. So we made the unique names. It's all uppercase letters. We have dots and underscores, but not consecutive and not at the beginning or end. That helps kind of the spoofing, so you don't get like a Uber dot, or something that looks like, that kind of thing. It would have to be, Ubu dot B, that kind of. Anyway, we tried to remove and then all uppercase, so you wouldn't get Uber with a U, B, lowercase r, and another one that's similar with all uppercase, etc. So so they're fairly unique once you have a name. So they're a little bit like domain names. So that was a big feature for us. And the other big one that's been super popular is when you create an asset, you can put the metadata, meaning the information about what your token or your asset is about, in IPFS, which is Interplanetary File System. You get back a hash, which is encoded. It starts QM, blah, blah, blah. It's 47 characters long. You put that in when you create your asset. And that way, in the Explorers, you can see your asset, its name, and you can click and it'll go right to the document that says what it's about. It could be a PDF, it could be a movie, it doesn't really matter because all that data is off chain. Someone needs to keep a copy. Right now, there's a swarm keeping a copy of everything that gets added to the Ravencoin chain. That may not last forever, but at least one person, probably the issuer, keeps a copy, then that will be available for people to know what the asset is about. And that's another benefit over the ERC20. You also get to decide how divisible it is from non-divisible, meaning whole units. Like maybe if it represents a cup of lemonade, you don't want to, sending a 2.5 of that, for example. But also you could say it's divisible up to 8 decimal places, so 0.00001, that kind of thing, like Bitcoin. 1/100 millionth. So you can set that, and then you own that asset. And what you do with it will depend on how it's looked at by regulatory agencies, and it varies across the world. This is a worldwide thing, so it's being used in other countries to do, shares of things or ownership of, partial ownership of things like that. And it is capable of doing, shares and stocks and things like that. If you're in the U.S., we have some features that will help if you're an issuer that are coming out, that will help the issuer stay compliant, because there's some pretty strict rules here about issuance and making sure it's only going to accredited and KYC and things like that. So on testnet and soon to be on mainnet will be a feature that kind of helps you be compliant in that area.
Mm-hmm. You mentioned mining. Mining's kind of evolved into a controversial topic.
Yeah.
What changes did you make from the Bitcoin model of mining?
So what we did was we if you're familiar with, so Bitcoin uses double SHA-256, right? It's a pretty standard, very good hashing algorithm, and it basically take the block, you do that twice, and you look for a low number. If you get a low number, you win, low enough, right? The problem is, not the problem, it's the way it works, right? As more people are mining, that number has to be even lower. It's sort of a random lottery kind of thing. So that's how mining works. We took, so if you're familiar with Dash uses what's called X11, and it's 11 algorithms in a row, and it starts with the first one, takes your block and hashes with the first one, takes the output of that, puts it in the second one, takes the output of that, third one, fourth one, etc., all through 11. Somebody else took that and made 13, so it was next 13, then somebody made it 15, and it was 17. It's pretty much all the same algorithms, pretty much in the same order, and then people were just adding 2 more algorithms. So we took and made it partly because we wanted to be more ASIC resistant, and there was already ASICs for Dash. So we made it so that when you each block, it would go through 16 algorithms. We have 16, but it would go through those algorithms in a random order based on the results of the hash of the last block, which everybody has to know anyway, right? To mine the next block, you have to have the previous block hash. So you take the last 8 bytes of that, and that 8 bytes, you chop each one of those bytes up in half, so you get 16 numbers, and that's the order of the algorithm. As you go through those 16 numbers, it's the order of the 16 algorithms that it pushes through. So that's the X16R that we switched to, and it was just there's a white paper on it on our website, Ravencoin.org.
And briefly, why did you choose to go that route?
There was a couple things. One of the things that Bruce wanted to do was keep it ASIC resistant. And the reason for ASIC resistance is not because we don't like specialized hardware, etc., but it does tend to centralize in data centers. Meaning the people that are buying ASICs are usually not individuals that are running one. They're usually people that say, "Hey, this is a profitable enterprise. I'm gonna get a warehouse in Washington State next to a hydroelectric plant, and I'm gonna put 100,000 of these things in." That tends to centralize it so that there's if there's just a few of those, then if somebody wants to kind of stop the network, they can basically go knock on those doors or whatever. And so we wanted it to be, well, 2 things. ASIC resistant, to have good distribution, meaning it's just people with video cards or CPUs spread around the world, everywhere, lots of them, individuals. And then also it's kind of it's a little bit like the people's coin. We want it to be hey, I'm done gaming, I have a GPU in my machine, I'm going to flip it on at night and make some Raven. And so then it helps with distribution. The people that do that tend to keep it, kind of knowing that, hey, it's going to have value and I'm going to hold on to it. A lot of times the people who are doing ASICs are not evil, just more like economic driven. Like, hey, my goal is just to make a lot of money, and so I'm paying a little bit of electricity, buying a lot of these machines, doing it as quickly as possible and selling as fast as I can, into the market. And so they tend to sell all of it. Mm-hmm. Not all of them, but most of them.
Correct me if I'm wrong, but we've seen, at least in the Bitcoin model, a lot of consolidation of these types of data centers or at least a preponderance of these data centers in countries like China.
Yeah. Yeah.
So what advice do you have for somebody that would want to start mining Ravencoin?
Yeah, so the nice part is relatively straightforward. Just get a machine with a video card, like a 1080 Ti, 2080 Ti. They're cheaper now than they have been, in the last few years, where there was a shortage of them because mining was so high. Just turn it on. Go to ravencoin.org, look at mining. There's a whole bunch of mining pools. Pick one at random, or pick one that doesn't have a lot of hash power or something. And pick one that looks good or safe or whatever. I don't recommend them because they're all good, and so we want people to distribute across lots of them. Pick one. There'll be instructions. Just click on help. It's literally like one line. You have to put in like log into the mining pool, create your password, put that on the line. Use the software that does the mining and just run it. That's it. If you want to get more advanced, you can make a rig, which is funded like as a kind of a do-it-yourself project, which is basically a motherboard, and get a bunch of 1, 2, 3, get more than one video card and put it on there, and then run that and make sure it is vented properly so it stays cool. That's the key. It does use power. If you have cheap power wherever you are listening to this, if you have cheap power, you have an advantage. Cheap power is in certain states. If you're in California and you're not running on like solar, probably not the best place to do it. Still might be worth it, if you have a gaming rig and your parents' power. But yeah.
But in Washington State, you mentioned, I believe there's a town called Wenatchee. Maybe that's wrong. Don't quote me. But there has been, I guess, some migration to this area to set up the data centers you described.
Yeah. There's a few different places that have either lots of hydro or excess solar or different or will give you cheap powers during certain times of the day because they need to handle daily loads with air conditioners, but we can sell cheap power at night, things like that. So
what's next for you?
So next for us is we actually have 4 features that are on testnet on Ravencoin, and our goal is to get those properly tested. We don't know of any serious problems with it currently, but we don't have enough eyeballs to kind of make sure. So we're going to do a bounty program over the next month. So if you're a top-notch developer or want to dig into consensus code, you can look at that. We'll make the source code's always available all the time. For everything we do, it's all open source. It's just a development project. You can go to Ravencoin project/Ravencoin and get the source code. That's on GitHub. Anyway, we want lots of people looking at that. We'll run the bounty program for about a month. We'll fix anything we find or that other people find. And then the plan is to activate that. And by activating it, it just means put out a version that says, hey, this version's kind of the new one. And then once, I think it's 85% of the people are mining with it, then it will kick over. And you can't get everybody because there's people that are have machines running and they're sleeping, not paying attention. But we want to get the most people on it, all the exchanges and all of that switched over to it, and then it will have 4 new features: messaging, memos, tags, and restricted assets. Tags and restricted assets are the ones I referred to as tools that will help issuers in high compliance areas for security tokens, and it's the ability to keep your token from moving to addresses that you don't want it to move to because you have to kind of stay compliant. And then memos is the ability, it's kind of one that's people are really excited about, the ability to add an IPFS hash to every transaction. And that allows you to do a bunch of stuff, including things like putting in manifests or for supply chain things and things like that. Messaging allows you to communicate with your token holders. So the client will pop up and say, hey, there's a message from the issuer of whatever the token is, and that'll pop up for all the people that own your token, right, if you're the issuer. Anyway, so those are all, that's what's next. That's what we're focusing on.
Great. Well, we spoke today with Tron Black at Blockchain Expo North America. He's the lead developer of Ravencoin and a principal developer at Medici Ventures.
Yep.
Thank you for talking with us today.
Thank you.